Hi everyone, welcome back. I'm just doing a video on the H4 time frame this week because I'm travelling around a bit, seeing family, and so I'm just going to sort of switch to H4 for the next 6 or 8 weeks. And I just wanted to show you a little technique I'm using that helps me stay in trades longer, because I think it's one of the key elements really. If you hold trades longer, then the odds are slightly more in your favour. So all I'm doing is I've decided to completely drop the reverse trades and just trade the high and the low of the week, and that frees up a lot of my time for doing other things, because once I've secured the high and the low, I don't really need to do anything until one of those has been taken out. And then what I'm doing is I'm waiting for an exit. I'm waiting for price. I'm waiting to have at least 2 highs or 2 lows open before I'll exit a trade, and then I wait for an opposing signal. So let me just give you a little run through of how that works out. So at the start of the week, we have to kind of take the start of the week as the high and low. So my first breakout trade would be here, which secures this high. Okay. And then we have this breakout here, which is the low. And then we don't do anything until one of these gets taken out. And this, we can see the low gets stopped out here, and then we'll probably get another chance at a low here, which also stops out. Okay, so we end that week with just the high left open. Next week starts, we take a high short here, and then we reverse from the low and we take the long from the low here. This one gets stopped out, and then we take a short here. This one also gets stopped out, and then a short here, which also gets stopped out. So at the end of this week, we've got 1 high and 1 low still open. Let me just clear some of that clutter, so that's clear what we've got open. We have this 1 high short and 1 low long. And then the next week we take a short here first, then a long. The long stops out, and then a long here, and then that's the end of that week. And you can see now we've got 2 shorts from the high open, and we've got 2 longs from the low open. So we could close them both out here, but we still kind of haven't achieved that ideal of having a decent win, really. Okay, so the next week starts and we just continue to trade. We take a short here and a long here, and then we break down to here, and then a long sets up here. Okay, and now we have this short from the high, this short from the high, and this one. Okay, now at this point we might decide to close those 3 shorts and hold the 2 longs. Okay, so we take some profit off the table. Price hasn't really broken away like we wanted to. The pattern hasn't quite been as we'd like, so we recover most of our costs there, if not all of them, and then we continue, and you can see we have this low and this low secured. So let me just wipe it back again so we can see clearly. Actually, I'm going to move the chart along a bit as well. Okay, so we have this low of this week here, and we have this low of this week here. And then we start the next week. We have a short here which stops out, and then we have a long from here. And then up here we get another short setup. Now here, this is a definite TP for me. Okay, so we have this long here, this long here, and this long here. Okay, so basically that's the two rules I'm looking for. I need at least two lows to close a long trade, and at least two highs to close a short trade. And then the point of exit, I'm looking for an opposing trade. Okay, so here I've got three lows and I've got an opposing short. Okay, so I close all three, and that's a very nice big win, and that would certainly have cleared all of my losses there and put me into nice profit. Okay, so let's move on a little bit further from there. Just so it's really clear. So I have this high of the week, this long stopped out, and then we have this long here. So this one would have stopped out. Price comes all the way up, and then we have a short. One of these would have triggered our short here for this week. This long stops out, this long stops out, and this long stops out. So now we have a low and a high secured. Let's mark those up. Low and a high. And then the next week, first trade probably be the long, and then a short here. And then price breaks down here, and then we get another long set up here. And at this point, you can close these two shorts. You've got two shorts, you've got an opposing setup. So you can close out the two shorts for profit. And then you've got two longs left open. Okay. We had this long back here, and this long off this low here. And then the next week starts. It's really difficult with the small bars to see the entries, but just that's not really the bit I'm focusing on here. I'm trying to sort of show the management of the trades. So you take a short here. I think there was a long in there that would have stopped out, and then there's a long here. The short stops out up here, and there you go. End of the week. Next week we have a short, and we have three longs here. So I'd probably close out those three longs and then just have this short, and so on and so forth. So it just kind of holds you in those trades a bit longer. And you know, I picked a particularly choppy part here just because, you know, it shows you it makes you realize that you're going to take strings of losses and drawdown before you get the breakout and the decent wins. So, you know, you are going to have to endure that. I just want to jump up to the weekly time frame now and show you why the kind of logic behind this, if you like. Okay, so you can see on the weekly time frame, when price moves in a strong trend, we would be securing these highs here and then taking wins at the low, and you'll find that it's very common that you get two highs or two lows that give you an exit. See this high and this high and this high and this high, and you would have had a long setup here and exited those two, and then this low would have survived, and well, maybe these two highs here down to this low here. Okay, so then you take profit on those two, and now we'd have the low of this week bar, and with this week take profit, low of this one and this one, take profit. Two more lows there, two highs here, two lows here, another two highs. So you see there's like lots of opportunities if you just secure the high and low of the week to get those decent stacked wins of two trades. You could take it further and stack three trades. I think that would give you even greater profit. But you know, again, you're going to have to endure a lower win rate and more drawdown before those profits come in. So that's it really. I mean, if that's not very clear, I'll do some more on it, but essentially for an exit we need to have 2 highs secured and then a low valid trade trigger, or for a long trade we need to have 2 lows secured and a high short trade trigger, and it's just this sort of technique for making you stay in the trades longer, and obviously your outcome's dependent on the movement of the market, but these weekly highs and lows are the best places to locate your trades. You see, they're the places that survive the retraces the most often, even in a market like we've got at the moment where it's not particularly trending. You're still going to get these at least 2 trades where you can hold them to an exit. So that's it. I'll do some more videos later in the week. See you all in the Facebook group, and good trading.